What if you could peek into the mind of one of the world's most successful investors, Warren Buffett? Imagine having the ability to understand the thoughts, strategies, and principles that have driven the success of a man who has been aptly nicknamed the Oracle of Omaha. This is Warren Buffett, a name that resonates with power and ingenuity in the world of business and investing. Born in Omaha, Nebraska in the early 30s, Buffett's journey to becoming one of the world's wealthiest individuals is a testament to his exceptional business acumen and investment prowess. His love for numbers was evident from a young age, and by the time he was 11, he had already bought his first shares in the stock market. From a precocious child with an uncanny knack for numbers, to the chairman and CEO of Berkshire Hathaway, a multinational conglomerate holding company, Buffett's rise to success has been nothing short of remarkable. His approach to investing, characterized by buying undervalued companies and holding onto them for the long term, has set him apart in an industry often dictated by short-term gains and quick turnovers. But what truly distinguishes Buffett is his ability to predict market trends and make investment decisions that others often overlook. This knack for seeing the unseen has earned him the moniker, the Oracle of Omaha. An oracle in ancient times was considered a divine source of wisdom and prophecy. Similarly, Buffett's investment decisions, guided by his profound understanding of the market and business dynamics, have often proven prophetic, yielding substantial returns in the long run. His journey, marked by a series of wise decisions, is a masterclass in effective investing and strategic thinking. It's an inspiration to anyone with an interest in business, finance, or the art of making money work for them. So, what are the business lessons we can learn from this oracle? As we delve deeper into the mind of Warren Buffett, we'll uncover the principles that have guided his investment strategy and shaped his extraordinary career. Buckle up as we prepare to explore the world of the Oracle of Omaha. One of the cornerstones of Buffett's strategy is value investing. Now, you might be wondering, what exactly is value investing? Well, it's a strategy that involves picking stocks that appear to be trading for less than their intrinsic or book value. In other words, value investors like Buffett are always on the hunt for bargains, for shares that are undervalued by the market. Now let's delve a little deeper into how Buffett utilizes this strategy. Take, for instance, his investments in Coca-Cola and American Express. These weren't just random choices. Buffett saw the inherent value in these companies that others overlooked. He saw strong brands, loyal customers, and solid financials, the hallmarks of a company worth much more than its market price suggested. In the mid-80s, Buffett bought stocks in Coca-Cola, a company that was going through a challenging phase. But Buffett saw beyond the temporary turmoil. He recognized the enduring appeal of the brand and its global reach. Today, Coca-Cola is one of the most profitable investments in the portfolio of Berkshire Hathaway, Buffett's investment company. Similarly, when American Express was embroiled in an infamous salad oil scandal in the 60s, its stock plummeted. But Buffett, ever the contrarian, swooped in. He saw a company with a sturdy business model and an iconic brand name that had been temporarily undervalued due to an unfortunate incident. Fast forward to today, and American Express is another jewel in the Berkshire crown. But remember, value investing is not just about buying cheap stocks. It's about finding companies that are undervalued for unjustifiable reasons. It's about understanding the difference between a company's price and its value. It's about recognizing potential where others see only peril, and that's the crux of it. Value investing is not just about numbers, but about recognizing potential. It's about seeing the diamond in the rough, the gold amongst the gravel. It's about patience, foresight, and most importantly, belief in the intrinsic value of good businesses. Buffett once said, "Someone's sitting in the shade today because someone planted a tree a long time ago." This wisdom rings true, especially in the world of business. Buffett's success story is a testament to the power of patience and long-term thinking. Let's delve into the world of Geico, a company Buffett first invested in back in the mid-20th century. It wasn't an overnight success story. Quite the contrary, it was a tale of steady growth, smart decisions, and above all, patience. Buffett recognized the potential of Geico and held on to his investment, even during turbulent times. Today, Geico is a household name, providing insurance for millions of people. Similarly, Berkshire Hathaway, a textile company that Buffett invested in during the early 60s, didn't turn into a multinational conglomerate overnight. Buffett saw potential in the company, and with patience and strategic long-term thinking, he transformed it into a powerhouse that houses businesses across various industries. Buffett's approach to investing isn't about quick wins or instant gratification. It's about investing in value and waiting for the market to recognize that value. It's about understanding that the world of business isn't a sprint, it's a marathon. Buffett's wisdom teaches us that patience isn't just about waiting, it's about maintaining a positive attitude while waiting. It's about making smart decisions and sticking to them, even when the market is volatile. In the business world, it's easy to get caught up in the rush. The desire to see quick results can often lead us to make hasty decisions. But Buffett's success story teaches us that patience and long-term thinking can lead to extraordinary results. Buffett's approach reminds us that time is a friend of the wise. It allows for growth, for potential to be realized, for value to be recognized. It's about planting a tree today and having the patience to wait for the shade tomorrow. In the world of instant gratification, Buffett teaches us the power of patience. Buffett doesn't invest in what he doesn't understand. This simple principle, a cornerstone of Warren Buffett's investment philosophy, has been instrumental in his success. Let's delve into why understanding the business is so crucial. Buffett's approach is not about chasing trends or making quick money. It's about investing in businesses that he comprehends and believes in. He takes the time to study the company, its operations, its market, and its financial health before making any decisions. This deep understanding allows him to gauge the real value of a business beyond its stock market price. Now let's turn back the clock to the dot-com bubble of the late 90s. The internet was the new frontier, and tech stocks were skyrocketing. Investors were pouring money into any company with a .com in its name, often without any understanding of what these companies actually did, or whether they had a viable business model. But not Buffett. He stayed away from the tech frenzy. Why? Because he didn't understand these businesses. And when the bubble burst, many investors saw their fortunes evaporate overnight. Meanwhile, Buffett, who had stuck to what he knew, emerged unscathed. This isn't to say that Buffett is averse to technology. In fact, he later invested heavily in Apple, but only after he understood the business and saw its value. It wasn't the technology that drew him in, but Apple's strong brand and loyal customer base. Buffett's approach teaches us that understanding a business goes beyond just knowing what it does. It involves understanding its industry, its competitors, its strengths, and its weaknesses. It means knowing where it stands today and where it could be in the future. It's about seeing the value that others might miss. Remember, investing is not about following the crowd. It's about making informed decisions based on a deep understanding of the business. And as Buffett has shown time and again, when you understand the business, you understand its value. So the next time you're considering an investment, ask yourself, do you truly understand the business? Understanding the business is understanding its value. Buffett is known for his integrity and ethical business practices. Now you might be wondering, what's the big deal about ethics in business? Well, let's dive into it and see why it's a vital cog in the machinery of successful business. The world of business is not just about making money, it's about making a positive impact, creating value, and above all, doing it in a way that is ethically sound. Warren Buffett, the Oracle of Omaha himself, has always placed ethics at the core of his business practices. He believes that ethical conduct is not just morally right, but also the most profitable course of action in the long run. Picture this. A business that operates ethically creates a positive image and gains the trust of its customers, employees, and stakeholders. This trust is a powerful asset, as it leads to customer loyalty, employee satisfaction, and overall business stability. But remember, trust, once lost, is hard to regain. Buffett once said, "It takes 20 years to build a reputation and 5 minutes to ruin it." He's not kidding. In the age of social media and instant news, a single ethical misstep can cause irreversible damage to a company's reputation. So ethical business practice is not just a matter of principle, it's a matter of survival. Ethics in business also involves transparency, accountability, and respect for the law. Buffett's Berkshire Hathaway, for instance, is renowned for its clear and honest communication with shareholders. Buffett himself is known to be a stickler for rules and regulations, believing that a good business should not just be profitable, but also lawful. and responsible. So the bottom line? Ethics in business is not just about avoiding trouble. It's about creating a sustainable, reputable, and profitable enterprise that stands the test of time. Because, as Buffett has shown us, the right way is not just the best way, it's the only way. Ethics in business is not just a choice, but a necessity. Even the Oracle of Omaha has faced failures. Yes, you heard it right. Warren Buffett, one of the most successful investors in the world, has also experienced the bitter taste of failure. And yet, instead of allowing these failures to define him, he chose to learn from them and use them as stepping stones towards his success. Take, for instance, the Dexter Shoe Company investment. In the early 90s, Buffett invested $400 million in Dexter Shoe, a company he believed had a promising future. However, over time, the company's value crumbled, leading to a significant loss. Buffett later referred to this investment as the worst he had ever made, stating that it had taught him a costly lesson in assessing the long-term viability of a business. But here's the catch. Buffett never allowed this failure to deter him. Instead, he used it as a learning opportunity, a chance to refine his investment strategies. He understood that failures are not dead ends, but detours that lead us towards the path of knowledge and wisdom. And this is precisely how Buffett views failures, not as setbacks, but as lessons. Each failure, he believes, is a chance to learn something new, to improve, to grow. In his own words, it's good to learn from your mistakes, but it's better to learn from other people's mistakes. And this is what separates Buffett from the rest. He is not afraid to fail. He recognizes that failure is a part of the journey, an integral component of success. He understands that without failure, there is no innovation, no improvement, no growth. So what's the takeaway here? Don't be afraid to fail. Embrace your failures, learn from them, grow from them. Remember, every failure brings you one step closer to success. It's not about how many times you fall, but about how many times you get up, dust yourself off, and keep moving forward. Failures are not setbacks, but lessons for the future. So the next time you face failure, don't despair. Instead, remember the lessons from the Oracle of Omaha and use your failures as stepping stones towards your success. Scene script. Warren Buffett's success is a testament to these lessons. We've journeyed through the wisdom of the Oracle of Omaha, and now let's distill the essence of what we've learned. The first lesson from Warren Buffett is value investing. The philosophy is simple, but profound. Buy stocks as you would buy a grocery, not as you would buy perfume. Look for businesses that are undervalued but inherently strong, and hold on to them. The second lesson is patience and long-term thinking. In the world of instant gratification, Buffett's approach is a breath of fresh air. He reminds us that Rome wasn't built in a day, and neither are successful investments. Patience is not just about waiting, but about maintaining confidence and composure during turbulent times. The third lesson is understanding the business. Buffett never invests in a business he doesn't understand. This lesson emphasizes the importance of knowledge and insight. It's about digging in deep, peeling the layers of a business, understanding its model, its market, its competitive edge, and its potential pitfalls. The fourth lesson is ethical business practices. Buffett's belief in integrity and honesty is a reminder that ethics and profits are not mutually exclusive. A successful business is built on trust, and trust is built on ethical practices. Fair dealings, transparency, and respect for stakeholders are not just moral choices, they are smart business decisions. The fifth and final lesson is about learning from failures. Buffett teaches us that failures are not roadblocks, but stepping stones to success. They are lessons in disguise, opportunities for growth and learning. Buffett's own journey is marked by mistakes, and he credits his success to the lessons he learned from these missteps. As we draw the curtains on this exploration of Buffett's wisdom, let's remind ourselves of these lessons. They are not just strategies for investment, but principles for life. They are not just about making money, but about making a difference. As we navigate our own business journeys, let us carry these Buffett lessons with us.